let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive. And we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting, a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
All right. Good afternoon, everyone. That is pretty much what tanked the markets this afternoon. Once again, I'll go back to the charts, but to summarize, premature to talk about pausing rate hikes. We have a ways to go. And once he said those words, you get the sense that the Fed is not going to be pivoting, at least until probably next year. At this point, maybe you could still get a glimmer of hope of 50 basis points next month. But we have CPI coming up on November 14th, and the inflation's not coming down. It's sticky, right? So this gives the Feds more and more ammo going into December meeting if the CPI is hot and or the PCE. In addition to that, the continued tight and hot labor market. All right. So welcome, guys. If you guys watched yesterday's video, I gave you guys 2 targets to look at for going into this meeting or after the results of the meeting. I said we were going to either retest this 284 and potentially move on to this moving average 200, 292.71. So those were our upside targets. Our downside targets was 266.97 or 266 going into this meeting because of this candlestick support, and we shot right through that. And at this point, we are under 266. We're at 265.78 in the after hours. Where do we go from here? Well, first off, we recognize that this pump was kind of low volume pump up, right? Okay, we got to reject that 284. And we bounce around this 270 area, looking for some type of support. And we just ripped through the 20 SMA pretty quickly. And look at the volume bar today. All right. So high volume pump, right? Low volume pump and high volume dump. All right. And so that's what we're seeing here. So based upon experience and what's happened over the last several of these FOMC meetings and catalyst driven events, we know that back in September 21, all right, when they announced the rate decision, he sounded hawkish. Okay. He didn't sound any dovish from that particular meeting. And so this is why the market is reacting. All right. So tomorrow, going into Thursday, you can see that we do continue to slide based on history. We most likely will continue to slide down a little bit. I do know that for sure, well, not for sure, nothing's for sure, but I do feel that we gapped down in the morning in the pre-market, and we got to fill this 260 gap. Let me go over to the 2-hour chart here. We do have this gap. Where is it? There it is. Okay. There's a gap over here in the 265. So we are in that gap zone. And so I do expect to see 262 at some point tomorrow. Okay. So you can see the symmetrical triangle did break down, but let's go back to the daily here. And so I'm going to say that we eventually at some point tomorrow fill that gap and we'll go from there. So downside target tomorrow is going to be 262 to 260. I do think the momentum is going to carry over here overnight. So I'm going to put a target here. I'm holding some puts overnight and SPX puts as well. So that's the story for today. And I do think that if we do break 260, we will eventually retest this 254, and then we'll get a double bottom bounce, probably right in time for CPI on November 14th. All right. So that's my update today. I hope you guys had a great day. I know that it was the upside, it went to 278 intraday, wasn't much upside. But we can see that the downside is pretty significant here, and a lot of fear that the Fed may continue its campaign to hike the rates, all right, and perhaps to go higher than expected over 5%.